Walter, welcome to Power Lunch. How was the year? As I said, your sort of share price has done little over the year. Some people might say that's a lost year, but from a company point of view, how was that period?
I think this year, certainly we were challenged with industrial unrest in our contract mining business. Our leasing, fleet management logistics business did very well. Our industrial equipment business did very well. So it was primarily a flat year for our contract mining and plant rental business.
Is that the one that you're really focusing on? I mean, when you put your results out, this is always at the top, contract mining and plant rental. That margin down from 10% in that particular division down to 8.7%. That's quite a big move. Are you taking steps to address that?
Yes, that is our biggest business. 50% of our revenue earning assets are in that business, and it should be the number one business in our portfolio. We have two problematic contracts that we are addressing very specifically, and equipment utilization is receiving a lot of attention. We have sorted out, and we trust this time last year we had equipment being destroyed through labor unrest. I'm happy to report that this year we've gone through the situation in the Rustenburg complex with no incidents. We trust the work that we've done in stabilizing our labor force has yielded dividends, and it is now to deal with the two problematic contracts and our equipment utilization to get that division back on track.
I don't want to keep on going on about this platinum situation, but when we see what's gone on over the last few days, the last few weeks, and indeed a few months, if you really cast your mind back, we think of the direct impact on the shares of the platinum houses themselves. But if you think laterally, of course, companies like yours also suffer. How have you suffered because of this labour unrest and this, not anarchy, but certainly unstable situation?
I think the past financial year, in particularly the platinum industries in a similar area to where it's currently on the go, it cost us about 200 million in profits, the labour unrest. This year going forward, we have seen stability. We trust that we've got it under control. We have, we listed in 2008, we listed May 2008, we were exposed in excess of 80% in platinum. To date, that exposure has been brought down. We are now less than 20% exposed to platinum, so we have diversified into coal and other commodities that are more defensive to protect ourselves from the volatility in the platinum industry.
And also, you haven't just diversified in that sense, but you've also diversified geographically as well. Will that continue in the period going forward?
Yes, we do see the rest of Africa as an attractive market. We've done very well in Mozambique. We have the Rio Tinto project that we do the contract mining for in Mozambique. That's done very well. Our plant rental business in the rest of Africa, particularly Mozambique, Namibia is doing very well. And our fleet management and logistics business has done very well in the rest of Africa as well.
Looking on the positive side, one of the things that you do emphasise right at the beginning of your results statement, Walter, is growth in revenue producing assets. Can you explain that? Up over 15%.
Yes, I think it's my ambition that for every rand that we invest in a revenue producing asset, which is invariably on an annuity contract, we should get a rand in return on revenue per annum. So that growth in revenue assets effectively should ultimately over its life cycle return us 1 rand per annum for every rand invested. So that is where the business's focus is. That's the base of the business. As a geared business, we tend to grow our revenue earning assets and put them on lease or contracts to customers.
We focus mainly on your contract mining and plant rental division, but going down the list, construction and mining equipment, fleet and logistics, and also industrial equipment, Walter. Any highlights and lowlights amongst those three lesser divisions? Still important divisions, but can you tell us about the year in those three?
I think our logistics and fleet management business, we've achieved a 20% return on equity in that business. We've achieved significant profits. Our PBT profit margin is in excess of 10%. Our industrial equipment business was, in the beginning of the year, was hit by the tsunami We were impacted by the very strong yen. We import Japanese equipment, and that business has performed very well. It's a 25% return on equity, has had tremendous growth. So those two businesses are the stalwart businesses. They're very defensive and robust, and they continue to perform well. Our construction mining equipment distributorship business, this past year we've seen the sale of the Eqstra Mining Services business to Caterpillar, who on-sold it to Barloworld. We're very satisfied. We've got, as a result of that, we've got 610 million cash in the bank that we have used to settle our 2013 debt. So that business was a bit destabilized with all the selling off and the diversification or the disinvestment in the mining equipment that was sold to Caterpillar. And we look forward this year that it'll be stabilized again. We've stripped out parts of that business. We've closed down the New Holland construction equipment distributorship, and that did detract them from the core focus of that business, and this year it should be back on track.
Let's quickly look at the prospects and the outlook from your point of view, Walter. What I'm getting from you now is that you're rationalising the business, you're putting in operational efficiencies, and just generally trying to make things more streamlined during relatively depressed times. As I say, your results steady, but not exactly shooting the lights out. Let me read you the first sentence of your prospect statement. It says the group's performance is expected to improve in the coming year as corrective action to address contract management issues in contract mining and plant rental takes effect. So as I say, it's more of a rationalisation looking forward to better times, I think.
I think we're very well positioned. We do see the global economic climate is depressed. The debt crisis in Europe is not going to go away in a hurry, but we feel very comfortable. Compared to 2008, when we were hit with a major recession, we are well positioned. We do not have any abnormal stock holdings that we have to worry about freezing up on us. We are in an enviable position. Our liquidity of the business is looking good. Our debt is smoothed out. We had very peaky debt targeted in 2013. That has all been smoothed out. And I think, yes, although we see a business confidence lacking in the global and in the South African context, as a company, we are positive that we will be able to withstand that and benefit in terms of us rationalizing the business and rectifying areas where we have loss-making entities or projects. That should give us good returns.
Very, very quickly, Walter, you mentioned Caterpillar earlier on, and the Caterpillar CEO yesterday, the international Caterpillar CEO, said that he'd never seen anything as uncertain, the economic outlook that is, in the 37 years he'd been in business. You see a stabilising of the global economy, do you?
No, I certainly don't. I think our view is it's still going to remain unstable, and we have to build in our model stability that will counter any of the fallout effects that are taking place. So we've done a lot to ensure the annuity nature of our business. We are a geared business, and we offer our shareholders that stability, and I think we've done a lot of work to smooth out our business to be able to withstand the global uncertainty. So we do not see that there's going to be any major improvement. We do see the uncertainty, and it's starting to come through in terms of commodity demand. Equipment is becoming more and more available, and yes, it's still flowing through the chains, but it's just the lead times are reducing, and we are seeing equipment becoming available sooner, which indicates there's a definite slowdown on the global economy.
Walter, thanks so much for your time this lunchtime. Good chat. That's Walter Hill, who is the CEO of Eqstra, commenting on that company's year-end numbers, which were released earlier today.